Thank you for coming in.
Good afternoon, Godfrey, and thank you for inviting me.
It's almost a month to the big day. You must be excited to be coming in and listing separately and, getting out of the shadow of your big parent.
Yes, it's very exciting for the MultiChoice Group because we are going to be listed on the JSE. We are going to stand on our own, and it's an opportune time because the business is at solid ground. It can stand on its 2 feet. It's showing growth, as we have seen with our results, half-year results, September 2018, that we have grown the subscribers nicely. Year on year, 1.7 million subscribers have come through as of September 18. We are showing positive growth in terms of profitability. We are also showing a good generation of profit in the business. So if you look at it, this is a growth story as well as a cash generative story with an ungeared balance sheet. Yeah. So it can't be a better story to tell than this time.
Absolutely. But of course, getting out of the shadow as well as the big umbrella of Naspers will leave you to the, how shall we put it, the big winds that blow from outside, including stronger competition, etc., that you're going to have to partake. I want you to make the pitch that you've been making to investors that you've been speaking about ahead of your listing. What are you telling them in terms of the story that MultiChoice is bringing to the JSE?
Yeah. MultiChoice is a very successful video entertainment business on the African continent, as you know. We are continuing on that trajectory of the dual growth strategy, wherein we continue to grow the pay TV platform in the middle and mass market, whilst at the same time investing on the connected video side, which is our OTT offering in terms of Showmax and dishless products.
You just used a big word. Please explain it. OTT. I want my listeners to understand what you're talking about.
Yes. Those are the over-the-top products, similar to the likes of Cell C Black and many others that have launched. Those equate to Showmax. Absolutely. Over the top, which means you are running at the back of somebody's infrastructure over the internet, running a video platform.
That's one of the big questions that I've been talking to people, and they've been asking the issue. How are you going to be dealing with those OTT players? In particular, of course, you've got a big gorilla over your head, overlooking you, Netflix. How are you going to compete against those big guys? What's the strategy there?
Yeah, the strategy is as follows. We have launched Showmax way before Netflix came into the market, in anticipation of all these other players coming into the market. That's the first thing that we did. We launched years prior to that. We continue to invest in Showmax. What we are leveraging from Godfrey is that we have got a lot of local content. Yes. We have got sports also as part of our of content that sits with us. Yeah. That should be able to put us in a better opportunity to be able to grow this OTT offering. As consumer habits change into online, we should be able to capitalize on the content offering that we have built over the years and be able to attract consumers onto our Showmax offering.
But that content is also now being attacked by other players, because you would be aware that there has been now a lot of noise around your, how shall I put it, control, if you like, to a large degree on the sports segment, which has been one of your big cash cows. Do you see that potentially harming you and the ability to be able to grow if you lose that sports franchise, which has been so good? I'll say it, all of us, when you subscribe to DSTV, especially for older guys like me, I'm looking for football.
Yeah. So what people don't realize with DSTV is that it's not always that the viewership, if you look at it, it's much better on local content, general entertainment than on sports.
Really?
Actually, not many people watch.
We think we're the only people.
No. Actually, general entertainment attracts more viewers than sports content. If you look at the viewership patterns and the numbers that are coming through, on our platform. However, sports will always be a competitive edge that we have held, that we have. We have built a nice brand around sport, which is our Super Sport brand. It's a strong brand that people love and people like to associate with it. Going into the future, competition has always been there on the sports content side. There are instances where on the rest of the African continent, we lost the English Premier League. But guess what? That year, we registered the highest growth of consumers in Nigeria. In that year where we lost the EPL, which is supposed to be the driver for customers, as many of our customers believe that that's the only thing. Absolutely. If we continue to invest in local content, and Africans are showing, they are no longer interested in seeing Hollywood coming into their household. They want to see people of their own on TV. And that's why local content continues to be the biggest driver of our business going forward and our strategy. Our channels that we have launched in Zambia, Kenya, continue to be the number one on our platform. And we are continuing to invest in local content. And also, the nice thing about local content, Godfrey, is that it reduces our exposure in terms of content in dollar terms.
Yes, of
we
course.
pay in local currency,
Yeah.
and therefore our forex exposure becomes limited,
Yeah.
and we're able to grow the business nicely and become more profitable.
Let's talk about pricing, because certainly that's one of the things that you'll have to fight the other guys on, because they have come in a lot cheaper than your packages. Is there any plan to relook the pricing of those packages? So, you know, we hear from other parts of the globe about how they watch their sports, for instance, or how they watch the other programming. When are you, or will you, potentially looking at allowing the customer to decide what they want to watch in their bouquet instead of giving us this big hat and then saying to us, pay that, and then you're done?
I think it's a question of people not understanding how the model works. If you try to price it based on whatever you watch, it becomes astronomical for people to be able to afford, and that is shown in many other places.
Can I be allowed to make that decision rather than you making that decision for me? If I want to watch Manny Pacquiao, I'll watch Manny Pacquiao, and then I'll shut down the TV and open it up maybe when I watch something else at midnight.
Unfortunately, that's the model that our business is not planning to go into. Our model is around packaging a whole number of content into bouquet and being able to sell on to our customers. This model allows us to spread the cost across a huge subscriber base and make sure that the pricing then becomes in line with what we have. We do a lot of research that informs us as to how do you end up having the packages that we see on our platform. That has continued to deliver results for the business, as we have seen in the past years, and we continue to believe that is the best way forward. Those that have tried to do that, some of them are regretting today.
I can tell you as a customer, you are forcing me to pay for stuff that I don't like to see on my bouquet. But let's leave that argument. Let's talk about the complexity of operating in 50 countries that you are now going to try and deepen as you try to grow the business.
You know, Africa is a very complex continent, and our experience of 30 years has shown you need local presence. And how we have approached it is that we have local presence across the countries that we operate. We have local management, we have people that we employ in those local areas that understand the local dynamics and are able to help us and identify the market opportunities that reside into those countries. While centrally, we then drive the strategy, we share the funding, we share in the allocation of costs and so forth to make sure that we deliver that. That also added to that was that Africa, as complex as it is, you need points of presence to be across the whole country for you to be able to receive. It's not like any other place in the world where people pay through credit cards and online. You need to be there for people to be able to pay you. People want to see you. People want to have contact with the service that we are offering. And that we have been able to do quite nicely across the continent. And it works very well, and we'll continue to drive it down.
And it comes with risks, of course, because we have seen, for instance, from the example of MTN, which has spread its tentacles around the African continent. After years and years of very good growth, we have now seen some things beginning to unravel. What sort of strategy are you taking in terms of mitigating that risk? And I'm not saying Africa is any riskier than other geographies, but you are having to deal with 50 countries and potentially more.
So like I was saying, we have points of presence in each and every country. We build teams, we build local teams that make sure that we have good relationships with regulators in all those
local equity partnership.
Local equity partnership as well. That's what we do in all the countries that we operate, and that is top of mind to ensure that we also invest in socio-economic upliftment of the communities that we serve. That augurs well in terms of relationship between ourselves and the countries that we operate in, and it has worked successfully. Hence, we have never had instances of any backlash, serious backlash anywhere on the continent just based on a product offering or any authorities really giving us problem with regard to what we are doing on the ground.
Absolutely, and then I begin to shudder about the kind of treasury that you need to run because of all those businesses, and I'm thinking MTN, here we go again. But let's leave it there. Thanks for coming in, Clive.
Thank you.
Calvo, I said Clive. Calvo Mawela is the Chief Executive Officer for MultiChoice.